You're listening to the Multifamily Marketwatch for Washington State. Apartment owners who need to know, trust HFO. The leading source for multifamily industry news around the state, from Puget Sound to the Tri-Cities.
Welcome back to HFO's Multifamily Marketwatch for Washington State. It's Monday, September 12th. I'm your host, HFO broker Aaron Kirk Douglas. Here's some news you may have missed since our last update 2 weeks ago. Washington State's remaining COVID-19 emergency orders will end in October, even as several Washington cities enact new tenant protections. Seattle Metro's apartment construction is among the highest in the nation. An initiative petition creating a new government-run low-income housing developer appears headed for the ballot in Seattle, and we'll get the latest on multifamily lending from Blake Herring of Gantry, Inc. HFO's podcasts are sponsored by forensic building consultants, multifamily due diligence assessment experts, construction design reviews, and more. Now on to our news briefing. Governor Jay Inslee announced last week that he will eliminate all remaining emergency orders related to the COVID-19 pandemic effective October 31st. As a result, the state's payment plan requirement for renters will end by May of 2023, and the eviction resolution pilot program will end in June. In addition, some jurisdictions have their own COVID-related protections that may go away immediately or at an expiration date a few months later. We'll provide updates on these changes as more information becomes available. Many Washington cities have enacted tenant protections in the past few weeks. They include the city of Redmond, which adopted extended notice times for rent increases and restricted the amount of move-in fees and security deposits. Those take effect July 30th. In Kenmore, the city council passed an ordinance requiring specified just causes for tenant evictions effective August 24th. The other cities taking action were Kirkland, which passed an ordinance requiring extended times for rent increase notices and reduced security fees and deposits starting September 18th. The city of Olympia, which followed suit and limited pet damage deposits as well. Olympia's ordinance takes effect on September 20th. And finally, the city of Issaquah has passed a requirement that tenants receive 120 days written notice of rent increases of over 3%, and that ordinance takes effect on October 5th. Rent Cafe and Yardi Matrix reported that Seattle Metro's apartment production jumped to the nation's 7th highest as the industry has rebounded to a 50-year production high. The report projected more than 6,200 new units in Seattle this year, with more than 1,200 each in Bellevue and Linwood, nearly 900 in Tacoma, 820 in Redmond, 370 in Everett, and 323 in Tukwila. Portland ranked 17th among the top U.S. 20 metros in projected new apartments, with New York, Dallas, Miami, Austin, and Houston in the top 5. The group House Our Neighbors have qualified a measure for the Seattle ballot in February of 2023. Initiative 135 would spur the development of publicly owned social housing geared at households making the area median income and below. The initiative would establish a public development corporation to develop, own, and lease public housing. It would not be required to follow federal rules to determine who qualifies for housing. Initiative organizers say they will ask the city to set aside startup funding for the agency, but if the city won't do that, they will seek a future vote on a funding ordinance. Seattle City Council member Alex Peterson outlined his proposal for the city's comprehensive plan update, referring to his proposal as Alternative L. Critics of his plan say it would be very conservative and only allow sixplexes, and for only all affordable projects on frequent transit lines. Affordable housing industry members contacted by The Urbanist said his proposal didn't appear to be workable and would not result in much additional housing. Peterson has a history of opposing housing, sometimes arguing that allowing dense infill near transit would increase the use of polluting single-occupancy vehicles. Amtrak will resume service of its Cascade train from Eugene to Vancouver, BC, starting September 26th. The line had been closed from Seattle to BC since the COVID pandemic started in March of 2020. That service will resume with just one round trip daily from Seattle to Vancouver, but will increase to twice daily when staffing allows. Sound Transit has reported it expects delayed timelines for the opening of 4 upcoming light rail extensions as a result of precast concrete defects, problematic soil conditions, and labor and pandemic-related delays. In national industry news, Freddie Mac released its 2022 mid-year family outlook, indicating it believed multifamily gross income would be up by 6.8% in 2022, with vacancies flat at roughly 5%. Freddie Mac Research Vice President Steve Guggemos said the agency expects the industry to weather economic uncertainty and interest rate volatility impacting the economy throughout the rest of this year. Los Angeles plans to end its COVID-19 protections by January, ending what have been some of the nation's strongest and longest-lasting restrictions. Tenants in the city received more than $1.5 billion in local and state rental assistance during the pandemic. Apartment List has reported that U.S. rent growth in August was about half of July's total, with the slowing of rents in August more in line with growth patterns seen before the pandemic. Meanwhile, the report cites a slight uptick in vacancies to 5.1%, up 1% from a year earlier. Finally, the report opines that slowing rent growth may help curb inflation. The National Multifamily Housing Council reports that the United States will require 266,000 new apartments every year to meet demand, including 12,000 new units in Washington and 6,000 in Oregon. And with me today is Blake Herring, principal with Gantry Inc. And it's been about a month since we last spoke, Blake. So what's happened?
Well, thank you for having me back. A lot has happened. We met in early August, Thursday the 11th to be exact. And at that time, the 10-year Treasury was in the mid-280s. Mm-hmm. As of today, the 10-year Treasury is at over 330.
Okay.
So we've seen about a 50 basis point increase in Treasury yields.
And what does that mean?
So what that means for apartment interest rates, whether you're talking 5, 7, or 10-year fixed rates, even those indices are a bit different. They're actually currently inverted. So the 5 is higher than the 7 is higher than the 10, which is atypical. Nonetheless, interest rates are going to be in the 475 at the low end of leverage, and all the way up to about 5.5% for a fixed rate loan.
Okay. And what's happened to activity on multifamily loans in the last month?
So activity has modified again a bit. When you're talking about interest rates, again, in that range of 475 to 550, that means lenders are unlikely to underwrite a cap rate below that interest rate.
Of course.
So cap rates have moved up at least from lender underwriting, which is going to limit the amount of debt a buyer can achieve.
Okay.
And presumably is slowing down the appetite of several buyers, and it's probably disconcerting for sellers.
And isn't the Fed meeting again pretty soon?
Yes, the Fed meets on September 21st, and the market at this point is anticipating at least a 50 basis point increase and very likely a 75 basis point increase.
Okay.
And that's in short term. That's in just the federal funds rate. So that doesn't have a direct effect on the longer term rates, but it does have a pretty corollary effect on short term rates.
Okay. Any other insights that you want to share with our listeners?
Well, I'd say the things to keep an eye on in terms of the economy, which directly affects long-term rates. Certainly the Fed's emphasis on fighting inflation and their attempts now at this point, something that's somewhat been forgotten, but their attempts to now reduce their balance sheet. So they're pulling money out of the system. They started a program, we used to refer to it as quantitative easing. It's now referred to as quantitative tightening. And in June, they were extracting about $47.5 billion per month.
Mm-hmm.
They've now increased that starting this month to $95 billion.
Okay.
So a pretty significant increase in the amount of money that's being extracted back out.
Okay. All right.
That's a big change. It's something to keep an eye on. And then the other two things I'd point out quickly would be what's happening in China, which is kind of off the radar a little bit, but they've been having a few more COVID concerns, and they will shut down large cities.
Yes.
Over 20 million people.
Right.
And completely shut down business for them.
Right.
So that's something to keep an eye on as it relates to global economy. The other thing to keep an eye on is because of the war that's continuing over with Russia and the Ukraine, it's having a pretty significant impact on the European Union and the cost of energy prices in Europe, which is causing inflation there. And so they too now are imposing rate increases to slow their level of inflation.
All right. Well, thank you so much.
You're welcome. Thanks.
Great talking to you again, and we'll see you again next month.
That sounds great.
All right. Thanks for listening. We'll be back in 2 weeks with the new edition of Multifamily Market Watch. Be sure to watch for special interviews being released throughout the month. Upcoming interviews include City of Tacoma Senior Planner Elliot Barnett, Eviction Attorney Quinn Posner, Tacoma Housing Authority Landlord Relations Specialist Alexis Eichel, and experts from Tacoma Public Utilities with the latest on energy incentives. Also, don't miss our HFO TV videos on our website and our YouTube channel, where we feature in-depth interviews with newsmakers of interest to the multifamily industry.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 206-705-5115 or visit our website at hfore.com for more information. HFO is an affiliate of the Global Real Estate Advisor Network.